Hello, hi, I'm Heather with Heather Lange Homes. October stats are here for single family homes in Santa Clara County. So let's dive right in and take a look. Active homes on market went down 10% from this time last month. Pending and sold sales also went down 16 and 19% respectively. So let's remember that we are now in this typical cycle of the year where we see inventory diminish as we go through the holidays and towards the end of the year here with the holiday season. The average days on market bumped up by another 8%. So that's translating into homes staying on market 2 days longer than they did last month in September, with it taking an average of 28 days now for homes to get into contract. So it continues to remain a steady trend here where buyers are purposefully taking their time, watching the market. Even with less inventory, there's still more to choose from with homes staying on market longer. They're being more conscientious with rate hikes going on. Some buyers are finding that their affordability ceiling is pushing them out of the industry right now. And again, other buyers are taking a little more time, actually even negotiating with with sellers before they get into contract. Motivated sellers are adjusting their prices with the shifting market here as well. This is evidenced with that average sales price for single family homes not changing, really remaining steady, sitting just under that $2 million mark, with the average price per square foot having gone down by 4%, now resting at an average of $1,004 per square foot. So lower inventory is helping to keep sale prices propped and steady at around that $2 million mark. But sellers are finding, and motivated sellers are finding, that they're having to adjust their price range into a more comfortable trading range where buyers will actually get motivated, get off the fence, and make those offers. The list to sold price ratio remained flat, with sellers either adjusting their offers to reflect their offer prices to reflect that shifted market, or becoming more transparent up front when they bring their house to market, not really playing around with offering too low or too high of a price, really trying to find that nice middle ground where buyers will see a transparent price and be willing to engage in negotiation. Months worth of inventory remains near that 1.5 months mark, worth of inventory mark. And again, we'll see that probably diminish more as we near the Thanksgiving holiday. As expected, the Fed did raise the prime rate by another 0.75 of a point. And then the mortgage interest rates in anticipation also hiked their rates. So that translated into seeing interest rates rise close to 0.5 point from this time last month, with the 30-year conforming fixed rate, as noted by Bank Rate, now currently resting around that 7.2% mark. Economists have begun we're starting to hear word and seeing that there is a turning point, that all of these Fed rate hikes are making a difference. And of course, there's lots of discussion about when can that be eased. In the meantime, we are hoping that as we get into December, we're hoping that we'll see the Fed quell that continued 0.75 point rise. We're hoping that maybe it'll be a little less next month. So that'll be something worth watching. And again, buyers are remaining vigilant as they're watching the market. So the best thing buyers can do right now with their mortgage brokers and realtors to stay close in touch. Make sure that you are constantly connecting with your mortgage lender, and then keep those full approvals in place. Again, homes that are in great locations and sellers that have decided to make those repairs that are necessarily to sell their home in these times of money costing more for buyers, we are seeing some multiple interest on homes that have been prepped well, and sellers are prepped well to adjust to this market. So buyers, stay vigilant, keep in touch with your lenders, and lenders are finding, and they have tools and programs where buyers can get in with little lower interest rates, with the variable loans, and then refinance a couple years down the line when we are hoping and expecting that eventually rates will need to come down. So that you can refinance once you're in your property and inflation is under a bit more control. Sellers, it is most important these days that you connect with a realtor that has an understanding and experienced in these shifting markets. It's important for you to consider prepping your home properly and making sure that your offer price is in a realistic trading zone for where the market has shifted. Again, the real estate market is in a healthy place. Buyers that are putting down down payments are good, healthy, strong down payments. The mortgage industry is strong. We are just going through a needed correction from where things were. And of course, with fighting inflation, we're seeing that speed through the housing market as well. So we are in adjustment, but it's not crashing. So if you'd like to talk a little bit more about your situation and your scenario, reach out to me. I'm Heather at Heather Lange Homes. You can reach me at 408-207-3130. Ping me, text me, email me, call me. I'm here to help you. I'll be here again next month. And in the meantime, stay healthy, get those vaccinations, be conscientious to keep your loved ones safe with your health as well. And I look forward to being here to share again next month on the real estate market here in Silicon Valley.